Welcome to Factful Finance, where we break down complex financial topics into practical advice you can use today. If you've ever wondered how mortgage forbearance impacts your credit score, you're not alone. Whether you've faced financial struggles or just want to be prepared, understanding this is crucial. Today, we're diving into what you can expect and how to navigate it with confidence. Now, did you know that in 2020, over 4 million homeowners in the U.S. entered mortgage forbearance due to the COVID-19 pandemic? It was a significant moment that had many wondering, how does this impact my credit score? Well, let's clear that up today. Before we get started, a quick reminder. This content is for educational purposes only. Be sure to consult with a financial advisor for guidance tailored to your unique situation. Let's break it down. Mortgage forbearance is when your lender allows you to pause or reduce your mortgage payments for a certain period, typically due to financial hardship. But how does it affect your credit score? First, it's important to understand that the forbearance itself doesn't directly harm your credit score, at least not in the traditional sense. Here's why. During the forbearance period, if your lender reports your account as current or paid as agreed, it won't show up negatively on your credit report. This is key because a missed payment or late payment is what usually hurts your credit score. However, things get a bit trickier when we dive into post-forbearance. Let's say you missed several payments, but worked out a plan to make them up later. If you don't stick to the repayment terms, or if the lender reports that the payments were missed and unpaid, your score could drop. Let me give you an example. Meet Liam, a 32-year-old graphic designer. Last year, Liam lost his job due to the pandemic, and he entered mortgage forbearance for 6 months. During that period, his payments were paused, but his lender continued to report his account as current. Liam's credit score stayed intact. Fast forward to 6 months later, Liam landed a new job but missed the first few post-forbearance payments. His lender reported these late payments, and his credit score dropped by 30 points. So, while forbearance itself may not hurt your score, what you do after matters. The bottom line? Stay on top of your repayment plan and communicate with your lender. Now let's talk about the long-term effects. According to a recent study by the Federal Reserve, more than 40% of people who entered forbearance faced significant credit score drops when they didn't follow through with agreed-upon payments. But here's the silver lining. Your credit score can rebound. If you manage to get back on track and avoid further delinquencies, your score can recover, though it may take some time. One thing to keep in mind is that each lender reports to credit bureaus in different ways, so it's vital to regularly check your credit report. You can request a free credit report once a year from each of the 3 major bureaus: Experian, TransUnion, and Equifax. This way, you can stay proactive and address any discrepancies before they escalate. But what if you're still in the forbearance period? You have options. First, ensure that your lender is reporting your account accurately. If there's a mistake, dispute it with the credit bureaus. Second, consider enrolling in a credit monitoring service to track your score in real time so you're always aware of any changes. Real-world tools like Credit Karma or Experian's free credit score tracker can help you stay updated. But remember, it's not just about your credit score. It's about making sure you're able to handle your financial responsibilities without falling behind. So what's the next step for you? If you're currently in mortgage forbearance, don't wait for the end of the term to take action. Contact your lender now to discuss your options for repayment and set up a plan that works for your budget. This proactive step can help safeguard your credit score and ensure that you're not caught off guard when the forbearance period ends. Now, let's talk about you. What's your strategy for staying on top of your credit score post-forbearance? Share your thoughts with us in the comments below. And as always, thank you for visiting Factful Finance. If you found this information helpful, why not hit that subscribe button and ring the bell so you don't miss out on our upcoming insights that will help you stay on top of your financial goals. We think you'll enjoy the video shown on screen next. It might just give you the extra boost you need to take charge of your finances. Remember, financial empowerment is all about making informed choices, and that's what we're here to help you do. Thanks for watching.